catch us up because obviously when we met last week, it was intensely busy with Fed QRA and earnings. Oh my, this week is much quieter, but we had 3 auctions and that was really front and center. And then next week we have CPI front and center. So catch us up on the macro.
This short clip is presented by Edge. Edge is our pro-to-pro advisory service, which is all about the macro with a focus on one-to-one engagement with the hedge fund manager, Craig Shapiro, economics advisor, Jeffrey Fouvry, and direct access to LaDuc Trading founder, Samantha LaDuc. For more information about Edge, visit www.laductrading.com/edge.
Yeah, I mean, what a reprieve after last week. But now I'm looking and I'm like, I'm falling asleep at the, at the switch here. I'm like, there's nothing there's really nothing going on. So which is nice because you get a chance to think and to write and to kind of figure things out. But yeah, look, it's been an incredibly slow week, but it's going to start to pick up some momentum as we exit the week and we start to set up for next week. So tomorrow we get a fair bit more Fed speak. And then again on Friday, basically we have, tomorrow daily speaks, and then Friday we have 5 Fed speakers. So there could be some fodder from there. And then also on Friday, we get the University of Michigan updated survey and keen to see what inflation expectations are in that report, because we know that in the past, the Fed has looked at that report as a tell for whether or not inflation expectations are still well anchored or may not be. And so look, to the extent that there's an upside surprise there on inflation expectations, then we start to think about the setup for next week, which is, another kind of mini macro Super Bowl, right? We get CPI, PPI, and Powell all speaking, and the cadence of that.
When is Powell?
So Powell speaks on, so the cadence of this is that we get on the data, we get PPI on the 14th at 8:30 in the morning, and we get Powell speaks at 10 o'clock on the morning of the 14th, which is Tuesday. And then CPI is the folling day, Wednesday. Not clear if Powell has the CPI when he speaks,
of course he does.
The day before. I mean, we could put our conspiracy theory caps on. Retail sales is also on the 15th. So CPI and retail sales are both on the 15th. Powell's on the 14th. Tomorrow we have a 30-year auction, and so far this week with respect to the auctions, they've come in okay, but yields are moving higher, and I think that this is the point of the supply, is that you cannot front run $500 billion a quarter of net duration issuance. It's just too big of a number. So every auction is it's a slog. It takes more private demand to suck up that incremental selling from the Treasury. And so I think it's just a drip of bond weakness with, and we always have the risk of something going really bad. And so I think that, we're going to continue to see yields grinding higher. Atlanta GDP estimate for the second quarter came out at 4.2%. That was out today. So where is the slowdown? There is not a slowdown that is commensurate with the Fed needing to provide any accommodation to this market. I've talked about how I believe they need to introduce this dual-sided risk about, making it as likely to raise rates as to cut rates. Powell pushed back on that, obviously, last week, and we discussed that last week. But as I predicted, he doesn't speak for the entirety of the committee. And so what we're hearing from various members, subsequent to the Fed meeting last week, is more hawkishness. We heard from Barkin, we heard from Bowman. Today we heard from Collins, who's a centrist, but talked about the need for demand to slow in order to bring inflation back down to target. So I think what we're going to wind up getting is we're going to get at the June meeting and the June dot plot, I think we're going to get the median dot at one cut for this year, down from 3. And I think we're going to get 5 or 6 people who are looking for no cuts this year. It's possible we may even get 1 or 2 dots that show a hike. Is still likely. I think there's a chance that Bowman and or Schmid from Kansas City, who's very hawkish, may throw that out there just to mix it up a little bit. So I think that the median dot is going to be 1 cut. I don't think the data is very supportive of any cuts. And I think the market, took the combination of Powell's dovishness and the weaker than expected payroll print last week, and they took it a little bit too far. And so now I think into what figures to be likely another strong CPI print that we get next week, I think the bond market's going to stay under pressure, and we are going to be trading this, stagflationary environment. And I know that that's a word that people are not comfortable using. And Powell said, I don't see the stag and I don't see the inflation. And really, look, as far as the stag is concerned, as far as the growth is concerned, look, I mean, the growth is fine. It's decelerating, but it's fine. Now, I don't know. I mean, Atlanta GDP 4.2% for second quarter. That's a big number. So maybe the growth isn't. Maybe we don't have the stag. We don't have the slowing growth. But as far as the inflation is concerned, we do have a reacceleration of inflation. And inflation is not getting back to 2%. It's getting stuck at its 3.5% level, and it looks like it's moving higher again. So I don't think we've created conditions that would allow the Fed to begin cutting anytime soon. And I think the market's going to trade that reality from the CPI print through to the June meeting, which is on June 12th. So to me, that creates a very precarious setup for risk. And so I don't know if we're going to fall between now and the CPI, or if we have to wait until after. But I think by the middle of June, risk assets are significantly lower as the bond market keeps selling off, as equities finally come to grips with the reality of higher yields. I'm playing that largely with small caps, which we've been through. I don't really see a very good setup for risk into the end of this quarter. For the next for the next week or so, I think it's a coin flip. It's a chop. It's a coin flip.
Yeah.
We have expiry next week, so we have some of the buyback flows are in place now, which make it difficult for the market to correct. But I think after expiry, that window of weakness is open, and I think we're going to see some fireworks.
The full episode is available to Edge paid members. For more information, visit LaDucTrading.com/edge.